Hello everyone and welcome to my new video on tech stocks and whether I think tech stocks will beat the denominator and outperform the 15% goal of performance, yearly performance that I have for any stock for me to consider investing in. So today I'm talking about Mercado Libre. It's a little followed stock. Actually, very few retail investors buy this stock for some reason. It's got huge institutional ownership, but very few retail investors. And I think that's too bad because this stock is inexpensive right now, and I think it's poised to grow quite a bit. So this is a stock focused on Latin America. Um, and I think it's a good idea to diversify sometimes one's business because most portfolios are probably very U.S. leaning, and this is actually a portfolio that exposes us to a market that is less present in portfolios, and a market that I think has a lot of growth going forward. And for two reasons, right? Growth because e-commerce is a mega trend, right? It is a secular tailwind for any business, right? And also because the penetration of the internet is still at about two-thirds in Latin America versus 95% in the USA. So you're really riding two trends by investing in a company like Mercado Libre, which is the rise of e-commerce, which is a worldwide trend, as well as the rise of the internet in that region of the world. So, what is Mercado Libre? Well, it is very much like an Amazon without the cloud business and without the direct selling by Amazon. So Mercado Libre is a platform that kind of resembles eBay, where it's a bunch of buyers who sell their products, but do not necessarily compete against Mercado Libre. Mercado Libre is not into sourcing and selling of products, but it is a platform that allows anybody to list products, a little bit like eBay. That is also the Alibaba business model here. So very similar to Amazon, aside from that 30% chunk of Amazon, which is actually fulfilled and purchased and delivered by Amazon. Then they have Mercado Envios, which is the shipping program. Most of the products bought on Mercado Libre are actually shipped through Mercado Libre's system, so that's very interesting. So we have shopping, online shopping, then we have shipping, and then we have payments. Payments is just think of eBay when they still owned PayPal. They have their own payment system on the platform, which is very successful. And actually, this payment system or this payment app is getting into a real world physical businesses. So there's a whole payment system addition, a little bit like Cash App, for example, would be. So that is an addition, and that is something that Amazon in the US doesn't have, right? And then they have a lending, like a small lending market where they can lend to customers for their purchases. So a little bit like an Afterpay or like an Affirm. So this is a business that really resembles Amazon in some ways because it is highly integrated across all of these segments. Um, and I think, interestingly, uh, in America, we tend to think that Amazon is a leader everywhere, but Amazon is not a leader in South America. Actually, in South America, it is Mercado Libre, number one in Brazil, number one in Argentina, number one in Mexico. These are the three largest countries in Latin America, but they're also in decent positions in Chile and Colombia, and they operate in more than a dozen countries in Latin America. So they have a great position, I believe. And you know that they have a great position when you take a look at their apps. I didn't copy a picture of their apps here, but if you go on the app store of your phone and try to look up the reviews of their apps, they get stellar reviews, much higher than other competitors, which really tells me that there is something good going on for this company. And clearly, if you look online, if you look on the internet, this company is a leader in e-commerce in that region of the world, to which I think few portfolios have enough exposure. Um, Therefore, let me get into the financials. Revenue growth is the most important thing that I always look at as a business. Eventually the return that you get on buying the stock equals the returns of revenue growth, and it's been consistent quarter after quarter after quarter. And I think that we're going to have at least 57% going forward of revenue growth, if not more. But it is one of these 50% compounded average revenue growth type of stock, which are very rare to find, but provide such outstanding return if you're able to hold. Companies that grow this fast are very forgiving. If you make a mistake in your assessment, wait a year or two, and the revenue doubled or tripled, and that kind of tends to cancel out any valuation mistake that you may want to make. And this is a company that still has a major growth runway, as explained by the mega trend explained earlier. So are there some headwinds? Well, a little bit, right? There's some competition. They're leader, but the competition in Latin America is actually much more evenly spread. It's not like the US where you have Amazon and then everyone else. Well, over there, competition is still very healthy, but they are emerging as the strongest competitor, and so they may end up being more than 50% of the market someday, or at least I really believe that. Concentration, very few customer concentration. The net promoter score is 46%, so that is okay, but that is almost excellent, right? So as they get better and better and better reviews, more and more people are likely to recommend buying on Mercado Libre. And then what is the macro sensitivity? Well, it is a little sensitive to macro because, of course, much of the stuff that people buy online on this platform is very often discretionary. And so with the Fed halting and halting monetary printing and getting into QT right now, and the whole world entering into recession, there is some sensitivity to be expected. But I still think the growth runway is very, very large. And the revenue growth is healthy to me because, again, growth by acquisition has been not that strong. Like there hasn't been any red flag, any huge acquisitions. And surprisingly, for a lot of growth stocks like this, but this is a good news, they spend very little on advertising. When I look at advertising, they spend quite little. So it's actually good to know that that revenue growth flows down to the balance sheet and to the bottom line. And actually, we don't spend a lot of amount of that revenue growth to go into advertising, which is a really good thing that I like to look at. So these are my preferred metrics. So when I look at my preferred metrics, gross margin is mostly on the fees that they earn in their various business, and it's a 52% gross margin. Price to gross margin at a 42 billion market cap is a 9.2. This is very low for a company that grows this fast. That's very low. Marketing expenses, I estimate at around 1 billion, 1.1 billion to be safe. So we can see that the post-marketing margin after you lose that money in marketing. Some people argue that it's an investment, but I typically argue that marketing spend is a lost money. It's not organic growth. I love organic growth. Marketing spend is not organic growth. So I want to remove that in my analysis, but we still get a price over post-marketing margin of 12, which is very inexpensive. This is one of the stocks that has been entirely battered by today's market. Dilution, there was a little bit of dilution more than 2 years ago, but we can see that the number of shares outstanding have been absolutely flat, so we're not getting diluted. There is high insider ownership. The founder is still the CEO, and that is a big deal. The company has some debt, so this is the big debate about having debt. The big advantage of having debt is that you get a little bit of leverage, right? That is a great thing. You get higher return, but you are just a robust company and not an anti-fragile company. There could be some sort of black swan event that could really, really hurt Mercado Libre because they have this debt. So they have some debt. Again, not a red flag, but not a green flag either. I would like to see that debt go down. Lastly, and this is very impressive, I think, for Latin America, they have a revenue per employee of almost 300,000 US dollars in Latin America. So wages are much lower in Latin America. So if you were to translate this number of revenue per employee to the United States, that would look probably as like a number in the millions. So that is a very, very, very highly productive employee base, which I love. I truly love that. This is great. So will Mercado Libre beat the denominator? Well, let's walk through a little bit of the companies that I'm analyzing right now. So Again, you're buying this stock 2.5 years later. The stock has only grown by 13% in 2.5 years, right? This is a stock that is down more than 50% year to date. This is a stock that has been battered. So it's absolutely terrible what's happened to this stock, and I think this is a great opportunity. But let's take it even a little further. Let's look at the price to sales. Price to sales is the lowest it's been in more than 12 years. It is the lowest it's been. If you've ever been interested in the leader in e-commerce in South America, this is the moment to buy it. This is the latest it's ever been. Uh, then continuing on to my favorite metrics and to the metrics that I use to analyze the companies that I invest in, they actually have the best metrics of all of the companies that I'm going to analyze this week. So SEM Rush, Pubmatic, Celsius Holdings, and MongoDB. If you look at MELI, I love MELI's numbers. I love MELI numbers. MELI's numbers are much better from a growth standpoint, aside from Celsius, which has absolutely outstanding growth, and we'll discuss Celsius later. But the price is so low for MELI. I do not understand how a company that has 57% growth and a huge runway, how can a company be trading so low at 12 times over post-marketing margin, knowing that I typically don't look at PE for a company that is this early on at its stage of growth. I mean, I think it's very unfair to look at PE because the company will eventually grow into normalized earnings, but right now the earnings are obviously very, very tiny because that company is growing so fast. But it's not fair to analyze it right now. I think price to sales on my own made up measures that I like to use, the price or on gross margin with marketing expenses removed, which it's really what I like to use. That's very low. That's very low compared to anything else that I analyze. You know, SEM Rush, Celsius, MongoDB. In my prior videos, you can look at companies like Tesla, like CloudStrike. They all have much higher price over post marketing margins. So again, well priced stock right now. And let me end up with a trademark of a channel. So could Mercado Libre 10x? Well, it's a $42 billion market cap valuation. So I like that because that means that you could, to 10x, you need to get to a $420 billion valuation. I think that is possible for a company growing this fast. That is not far-fetched. I mean, the Amazon of America and Europe right now is trading at close to $2 trillion. It's not far-fetched to imagine that as Latin America grows, as the economic development keeps going in the right direction in Latin America, it's not far-fetched to think that their e-commerce leader would be worth 420 billion. Absolutely not far-fetched. But it's even less far-fetched if you take into account what I expect the dilution of the US dollar will be. Because I think that the Fed is going to resume quantitative easing and is going to resume printing. And so $1 today is $1 of 2022. But in 2027, to get $1 of 2022, you'll need 50 cents, right? And in 2032, $1 of 2032 will only be worth 25 cents of today. And so what we can say is that 420 billions in 2032. So in 10 years, 10x in 10 years, assuming it gets to 420 billion, that would only equal 105 billion of value today. So again, a very plausible outcome, I believe, for a company that has been growing for 50% a year and appears to keep growing for 50% a year. Again, none of this is investment advice, and it will never be investment advice. This is just entertainment. Thank you so much for watching. Don't forget to like and subscribe. Thank you.